Hi, welcome to the market alert for Friday, the 4th of December 2015. And here you join me live, as it were, yesterday afternoon, watching the market, waiting to see what was going to happen once the market opened. This red line obviously waiting for Yellen to speak, so it's time to stay out of the market, as you saw from the emails that I sent yesterday afternoon as well. She spoke for a very long time yesterday, in fact the duration of the first part of the afternoon, so you can see how serious it's becoming with this potential rate rise. So what we've got here is Draghi, Super Mario, the market dropping off as he decided to cut the deposit rate by 10 basis points, and then he said he was going to continue the 60 billion a month, 720 billion a year of QE until March 2017. So now we've got the situation in the chart where we're waiting for Yellen to speak. They didn't like what Draghi had to do, which is unusual because the fact that he's cut rates and also continuing the QE program. Maybe it's a bit like being a drug user, somebody that's on heroin. They need more to get the same kick, and it's obviously not working anymore. The market's losing confidence in all of the central bankers' abilities to actually turn this so-called recession around that we've had since 2008. They're never going to turn it around. Complete and utter waste of time printing all of this money. They should just have a clear out of all of the corruption in the banks and let them go bust, but they wouldn't let them do that. Too big to fail. Frighten the politicians into potential anarchy and runs on the banks, and job done. How much money do you want? And a check written. That's basically what happened in a nutshell. So for the first part of the session, Yellen's speaking, so these signals are invalid, and that's why I sent out an email to you to alert you to this, because the market had already dropped over 150 points as well. And then she spoke, and we can wind all the way through the session. You can see there we had a bit of activity. She still spoke for the first part, and now you'll see the market become sideways as she packed her bags and cleared back off to the office there. So the market's now become quiet, and then we get a potential sell signal just after the start of the 6:30 evening session, and the market fills this. We've got the weakness in the background here as well, and here, where the market's not buying any of what she's saying or Draghi, and then the market continues to move lower. You'll see a bit of flashing on the screens here as I keep resetting everything and moving things. And again, just to remind you, when the market drives through the scalp level, then and the psychological levels, then it's an indication to actually trail the stop. As you see there, the market then continuing. So we're in a trailing situation, and you'll see me remove the initial stop and the scalp now, and I'm going to use this psychological level of 17,550 to as the stop price if the market comes back initially, because we haven't got any other lower high to actually put the stop. But then we get a second bite of the cherry there. We're already short, so it doesn't really matter. And you can see there now I've just put the scalp line in there, so I can have somewhere to move or come out of the market should it move back. The market's continuing to make these lower highs, and you can see now I'm moving down as the market continues lower. We trade all the way down to the psychological line of 17,500. At the moment I'm leaving the stop where it is, and again we'll see the market finding support. Now what I've done here, I could have taken the money at the line, but because of the weakness in the background, the market's got a bit of momentum behind it. It's worth giving up a few points to just let it breathe enough to see if the market will move lower. And sure enough, it came back. I thought I was packing in for the day, but it didn't, and then we broke through again on a big bar, and again you'll see me moving the stop now to the psychological line from this lower high. 50% back takes us straight back to the 17,500, and then the market comes down to the next psychological line, and now we've got 137 points profit on this trade. I can't move the stop at the moment because 50% above this is just under, so I left it for a minute or two, but then you'll see me switch, and there's the stop now moved, and again we'll see if the market moves back, and once again we go through again, we drive through, but this time what's interesting is the market's gone down and it's actually come back straight off the lows, leaving the stop in place. You can see we had over 160 points profit on the actual trade, but as you'll know if you're watching the markets, prices start to come back. I've moved the stop one more time. We've got this other lower high here, we've got the psychological level, and then eventually you'll see the market come back as prices find support. And what's interesting, these types of price bars here where the market comes off the lows, you will find that the volume's very high and the market tends to turn around off these. You can see one here as well where the market bounced back before then moving lower. It just comes back up. It doesn't come back halfway, it comes back about just over a third, and if the volume is high you'll see the market bounce off this. And in fact, if I grab the slider, I'm sure I actually had a look at the volume on this one. It may have been earlier when I had a look, but I know I did have a look just to see what it was actually doing. Let me just grab this, and there we go. Market's moving back towards the stop, and I've now just rescaled. I wanted to have a look and see if it was hit on this bar, and it wasn't. And then prices continue again sideways to higher, and there we go. You can see the market taking out the stop there, and it's time to leave the trade. 422 points on there. Like I say, there was another 40 points down to here, but you sometimes you've got to let the market breathe, and again it's still more points than we'd have had if we'd have come out here. So again, I was letting the market tell me what to do by just moving the stops down there, and we know that we've got about 400 point drop in the background, so eventually the market's going to find some support. But like I say, keep an eye out for these price bars because they certainly do show some turning points in the market. And I'll have a look at this in the software in a moment and just show you what I mean about the volume on these types of bars and why they can be a very good trigger to alert you that the market may turn around. So let's switch to the software now, as opposed to yesterday's recording, see what the market's done on the overnight and what we've got in store as far as the news is concerned today as well. Okay, for those of you that trade the advanced, the software signals are more or less the same. Those in the first part of the session which were ignored based upon the email I sent out warning that Yellen was going to speak for quite some time. And then in the evening session you see the same thing there. There's we've got the PTIs, the triple X's, and just again another PTI there. But coming down to this price bar here, again you can see the volume is very high, the market comes off the low, and then prices become sideways there. We did have a buy signal there, but after collecting 122 points there's no point in getting greedy, as I've said many times before, and the market became sideways there after finding that support. It did come back down to the low, but since then the market's moved sideways to higher during the overnight session there. In the daily chart, we'll stick with the advanced chart for this. It's no different in the basic, except you haven't got the volume in there. But here we can see there's definitely some selling over the last 2 days, and the market's back at the 200 moving average there as well, finding support there. So again, if you use the advanced version of the software, you'll see that the market's at a crucial point at the moment, and that's why the market's finding support, because of the 200-day moving average there. News front today, I think it's a big one. It is indeed. It's the non-farm employment change. This is out at 1:30. We've been waiting a while for this one, and as Yellen said yesterday that she was waiting to see this other data before she would make a decision on interest rates, but the consensus seems to be that she's going to raise, the sooner the better. The yields on the bond market yesterday moving sharply higher as well in anticipation of this. So again, that's indicating that the bond market's not going to be happy should she raise rates on the 16th of December. So not long to wait now, week after next, and we can get all of this uncertainty out of the way, and also bring on the volatility, because if she doesn't raise rates, she's got a credibility problem as well. So non-farm pay today, trade balance at 130, nothing out after 130 today, so hopefully the non-farm payroll figures will be so far apart from the forecasted figures that we will see the market create its own volatility from it, and then obviously maintain that direction as well. And then finally, implied volatility up sharply as you'd expect, with a 400-point drop in the background, 15.72. And again, you can see that in the chart, the yellow line definitely above the blue historic line there now for the implied volatility. Right, that's it for today. I will see you in Monday's edition. Have a great weekend, and as ever, thank you for your support, also for watching. If I see anything during the day, then I will let you know, as I did yesterday. As ever, thanks for watching. See you in the next one.